Welcome to the Aging Boomers. I'm your host, Frank Sampson, and on this show we discuss many of the issues facing boomers, their parents, and what, of course, we know is an aging population. And we're on show number 21. I feel we just started yesterday, but we're moving along here, and we've got some great guests, as we always do. But I want to let you know that the show is sponsored by Elder Care Resources USA.com. Information for an aging world. Enjoy informative articles, watch videos, download helpful guides, and learn from nationally recognized experts and connect with key local providers. So visit eldercareresourcesusa.com. If you're out on the West Coast, you could go to the local sites directly. You could go to ecrbayarea.com, ecrsacramento.com, or ecrlosangeles.com. A lot of great information and resources on those sites. So hope you'll take some time and take a look. And we have with us today Janice Fincher and Andy Block from Opes Advisors. Janice has 28 years of experience in the real estate and mortgage industry, in both the real estate and mortgage industries. For 8 years, Janice was employed as a new home sales manager and as a marketing and sales consultant for a prominent New York developer. Upon moving to California in 1990, Janice began her career as a mortgage lender, achieving President's Club status for many of those years. She has a bachelor's degree from the University of Georgia. Great football team. Andy has over 20 years of experience in the mortgage industry as a mortgage advisor and personal finance advisor for Opes. Andy's expertise is in assisting individuals and families to make wise decisions about their personal finances. Andy graduated magna cum laude from the University of California, Santa Barbara. Great school. My son went there. Janice and Andy specialize in reverse mortgages, which help seniors access the equity in their homes to make their retirement years comfortable. So thanks for Janice. Andy, thanks for joining us on the Aging Boomers.
Great to be here.
Sure.
Yeah, great to have you. And this is a subject matter I think needs certainly more attention. I know there's people see ads on TV and there's been a lot of promotion on it, but I think I just want to start out with understanding for our listeners what is a reverse mortgage exactly, and are there different types of reverse mortgages?
Yes, well, a reverse mortgage is a type of loan that's available to seniors that allows them to access some of the equity from their home without having to make any monthly payments, and also without having to be income qualified. Yes, there are different types of different types of reverse mortgages. There are fixed rate ones where the rate is fixed for the entirety of the loan, and there are adjustable rate ones. And those have often a little more flexibility, but those rates do adjust periodically. And then also there is a unique product out there, a jumbo reverse mortgage, available for those people like us here in California who have very expensive homes. They can access actually much larger reverse mortgages than are normally available with the FHA type.
Okay. And maybe, Janice, you could explain home equity. So I know you said you're using equity in your home. So maybe you could just explain the difference between a reverse mortgage and other types of mortgages like a home equity loan. What's the main difference between the two?
Right. Well, an equity line, you still do have to qualify for that income-wise, just like you do on a regular refinance loan or a purchase loan. And the payments are still required on a monthly basis. They are interest only usually, so the payments are often lower than a regular mortgage, but you still have to make monthly payments. So a reverse mortgage, you don't need income to qualify, and you don't have to make any monthly payments at all.
Gotcha. Well, that's a huge difference.
Yes.
Right. So why is it that in the past, and I emphasize in the past, reverse mortgages really didn't get the best publicity? It might have been some bad PR. There's always a few bad apples out there, but why was that? And maybe Andy, you could talk about it. How have things changed from that standpoint? Can you go into that and give our listeners
Sure.
maybe a better feel of that reverse mortgages could be a good option for them today?
Absolutely. Well, many years ago, reverse mortgages weren't very well regulated, and some had features that, frankly, were actually in the best interest of the lenders and not their customers. One of the more controversial ones that got a lot of publicity, and again, this is years back, was a provision that allowed a lender to share in the future appreciation of the senior's home. And that was something that a lot of seniors didn't find out about until it was time to sell the home, or the heirs found out when it was time to sell the home. And so what the shared appreciation did was, if the home experienced a lot of appreciation, the lender received the lion's share of the appreciation when it came time to sell the home. This shared appreciation option is no longer offered today. It hasn't been offered for many, many years, but it's still something that people remember because it was so controversial at the time. And so, that's one of the features that was really negatively perceived for valid reasons. And reverse mortgages are pretty complex, or more complex than a traditional mortgage. So the government has really made it a top priority to ensure that seniors and families understand how they work. And so that's why now, and this has been going on for many years as well, but potential applicants have to receive reverse mortgage counseling. And there are agencies that are approved and certified by the Department of Housing and Urban Development to advise people on the different reverse mortgage products. So it's mandatory counseling, and it's counseling that's required before someone can start the loan application process. So the government has really helped to regulate them more and make them safer, and those negative products that were around before are no longer there. So it's a much more solid product. And the articles that we're seeing over the past few years are starting to kind of turn the tide and turn some of those negative stereotypes that were around from some of the very older reverse mortgages.
So those the people that took out those reverse mortgages that are getting a bad rap, did the laws change? So even if they already took it out, or they're kind of stuck with it?
Yeah, I think there was some litigation and back and forth between those folks and the lenders. I don't think that changed the original. And it wasn't really many reverse mortgage lenders that had that option, but there were a few, like Lehman Brothers, that had it. So it's I haven't heard about situations and cases with those in a long time, but I think that's, those that had it, they dealt with it, but the reverse mortgages over the past 15, 20 years, it has not been an issue.
Okay. Maybe, Andy, you could also talk about who are reverse mortgages. I mean, who are they really geared for, and who are they not geared for? I mean, I'm sure you've had people, you've got a good reputation, and I'm sure you've had people that you may have said, hey, this isn't right for you. All right.
Sure.
But then there's people that it really could help. So maybe you could help explain who it's really geared for and who it's not geared for.
Well, I think there are situations that it's appropriate for, and situations where it's not. And because the closing costs are higher on a reverse mortgage than a traditional mortgage, a cash out refinance or an equity line, reverse mortgages are really geared for someone who plans to stay in their home for a long period of time, not a short-term solution. Somebody who needs money for a short period of time is much better served with a home equity line of credit if they can qualify for it, or some other means of short-term financing. But for long-term, that's really what they're geared for. And they're also not appropriate for somebody who wants to use the funds to purchase a financial product like an annuity and things like that. So they're really geared for the long term, somebody who's in good health, who wants to stay in their home, but is short on funds. And that's the ideal situation. for a reverse mortgage.
It's interesting. You mentioned somebody who's in good health. They might be in good health, but I know that I have found in this industry that there are people that may not be in the best of health, but still can stay in their home. They may need some outside caregiving, somebody to come in and help them, whether it's on a daily basis or every few days. And they have found that the reverse mortgage helps pay for that care. So, what's your opinion on that?
Well, I think that's actually, and I've done a number of reverse mortgages for clients who have been, not in fabulous health, but good enough to where they are able to do a lot of things on their own. But they have people that come in a few days a week. And I've had other clients who've had, more full-time care. So that's an excellent way to do it. And a lot of seniors just want to stay in their home. And so if it means having somebody come in, which costs money, that's where a reverse mortgage can really be beneficial. But you're right. They don't have to be in perfect health by any means. It's just more a matter of healthy enough to where they can probably be there for a while.
Yeah. So Janice, how do people access these funds? I mean, is it as simple as writing a check, or what's the? How does it work?
Actually, it is very easy. First of all, one of the ways they can access the funds is, of course, to take one lump sum right at the closing, which is actually required in a fixed rate loan. But normally on the adjustable rate reverse mortgages, they have many different ways to access the funds. And what we do is at closing time, we do set up an automatic account to be able to transfer funds easily from the lender to the borrower automatically upon their request. So they can email or fax in a request and have money deposited right into their account whenever they need it. Within a few days of asking for it. But the ways that you can access it are varied. They can take a lump sum up front. They can have set up 10-year or lifetime guaranteed payments if they want. There's a certain amount that they will qualify for to receive on a monthly basis for the rest of their life. So even if they live to 100, they're guaranteed these payments. That's one option. Also, another option is just to set a certain amount. Maybe they don't need quite as much as a 10-year payment, a life payment, or maybe they need more on a monthly basis. They can set up that to come in automatically on a monthly basis. Or they can just have a line of credit and have it available to them, and when they need it, they just fax in a request and take a lump sum periodically whenever they want to access some funds. And then they can do a combination of all these if they want. They can take some money out up front and do some improvements on their home, and then they can also set up a small amount that is guaranteed for life and still have money left over in a line of credit where they can access that for emergencies if they need higher amounts. So, and actually they can even change their mind later on in the loan. Once they make a decision up front, they can change it and all of a sudden decide they want it set up a different way later on. They can do that. So there's a tremendous amount of flexibility, and it is very easy to access the funds. And the money is there and guaranteed for you. And another special feature of a reverse mortgage is that if you have a line of credit there, if you haven't used all the money up front, that line actually grows every year. It gets a little bit larger every year. So it's really nice because then you can access a little more of your funds as time goes on. So that's a very unique feature to a reverse mortgage.
Now, we're not seeing it now, fortunately. Prices of homes are going up. But what happened to those people in the downturn? And, I hope I'm wrong, but I think I got you guys by a few years, and history shows that you got your ups and you got your downs. It's just the reality of it.
Yeah.
So what happened to those people that where the value of their homes took a dive?
Well, it's one of the advantages of a reverse mortgage is that it is a non-recourse loan, which means the lender cannot access any of your personal money. They can only access the value in the property. So if for some reason the home does go down in value and your loan is going to be growing over time because you have deferred interest in a reverse mortgage. So if for some reason you decide you need to sell your home, you need to move out of your home, and your loan amount ends up being higher than the value of your home, you don't have to worry about that extra money. You only pay the lender what you can sell the home for, minus any cost to sell the home, which are closing costs or your realtor's fees. Whatever is left, then you pay that to the lender. So that's what they mean by non-recourse. They can't access any of your other funds. You're not required to pay anything more than what you can sell the home for, minus the cost to sell the home. So it's a great protection. There is mortgage insurance required on a reverse mortgage, and that is what you pay for. It's a protection. It protects the lender, and it protects you.
So if I'm understanding right, if the value of the house goes up, you benefit. If it goes down, it doesn't hurt you as it relates to the reverse mortgage itself.
Very true. Very true.
That's a great deal.
Yes.
I like that. So general guidelines. Andy, you want to talk about that? Just general guidelines so people understand generally how reverse mortgages work?
Sure. It's pretty straightforward. There's a few key requirements for a senior to be eligible for a reverse mortgage. They have to be at least 62 years of age or older. If it's a married couple or a couple together, the youngest of the two has to be at least 62 years of age. They have to occupy the home as their primary residence, so it does not work on a rental property or a second home. And they have to have equity in their home, of course. So those are the key requirements to be able to obtain a reverse mortgage. And then there's some guidelines in terms of when the loan has to be paid off. So the reverse has to be paid back when one of three things happen. When the home is sold, they decide to move. When a senior leaves the home for more than 12 months. So if something happens, somebody slips and falls and maybe has to go into a skilled nursing facility or something like that for a couple months, no problem. But if they know they're going to be leaving the home for more than 12 months, they're supposed to notify the lender. And the last situation is when the surviving senior passes away and the heirs inherit the property. They're required to let the lender know, and then the lender works with the family to, kind of keep in touch and to therefore the loan needs to be paid off within a certain period of time. But they give the family generally 6 to 12 months to sell the home. And obviously in certain markets like California, it doesn't take too long to sell the home. But usually it's 3 or 6 month renewable periods where, as long as they're actively trying to sell the home or refinance it one way or another to pay off the loan. So that's kind of the general guidelines of a reverse mortgage.
Okay. Is the application process cumbersome? I mean, I know anytime someone does a regular mortgage, there's just tons of paperwork. All right. Is it the same with reverse mortgages?
I'll jump in. In terms of the documentation, no. On a traditional mortgage, which Janice and I do quite a few of as well, there are quite a few asset statements and income documentation, all sorts of things that have to be collected. On a reverse, because there isn't yet income qualifying or not nearly as significant, there's not much documentation that they need to provide. If the property's in a living trust, we get a copy of the trust, and we get a few other things, but it's not nearly as cumbersome as the traditional mortgage process has become over the past few years. So it's pretty straightforward, and of course, we go through the application with them, so it makes it as easy as possible and pretty straightforward for the senior.
Is there a way for the senior to have an idea on how much they could qualify for? Is there a formula of some sort?
Yeah, what they basically do is there's all the reverse mortgage lenders have software, and you just basically need to enter in some very very basic information, the ages of the borrowers, the birth dates, the amount of the equity in their homes, or more precisely, what they owe against the home if they have a mortgage against it right now. And then we plug that information into the reverse mortgage software, and it determines the maximum amount that's available based on the type of reverse mortgage that they're looking at. Or we just put together a comparison of several different types of reverses, and those key variables will determine how much funds they can access.
So I know you're based in California, so I would love you to just explain a little bit more about Opes Advisors, what you're all about, and for those that aren't in California listening to this podcast, just suggestions to them on the best way to find an advisor like yourself, maybe in other states. How do they go about doing that to make sure they're talking to the right people? Anybody want to give that one a shot?
Well, we are, both Andy and I both are regular mortgage advisors, and also we are a personal finance advisor, so we have a lot of background in helping people understand their choices and so forth. So it is good if you find someone who actually understands regular mortgages, lines of credits, and so forth, in addition to reverse mortgages, so that they have all the different information in front of them and all the different possibilities that might work for a borrower in case they do qualify for a line of credit or something like that, which might be a little less expensive than a reverse mortgage. I think it's good to find some lender who is knowledgeable in all types of loans. We can help people all over California, and I have. And we do have, again, that type of multi-knowledge to help people figure out if it's financially the right decision for them. So I think that's the most important thing.
Would you be able to direct somebody in another state, possibly? You know, if somebody wanted to contact you and needed help in another state, can you direct
Yes,
them?
actually we could, because we work with a few different lenders that actually have access to others that work in all the states. So they probably could help us refer people to other good, qualified reverse mortgage lenders.
Great. And how would people get a hold of you at Opes Advisors? Website, email, phone, whatever you'd like to share.
Well, this is Janice Fincher, and my telephone number is 650-931-0608. We're based out of San Mateo. We work actually mainly on the peninsula, but also all over California. Also, my email address is jfincher, Fincher, at opesadvisors.com, and that's opesadvisors.com.
Okay. And Andy, how would they get a hold of you?
I am literally right next door to Janice in adjoining offices. I am at area code 650-931-0605, and email address is ablock@opesadvisors.com, and people can feel free to contact either Janice or myself. We work together, and so if one of us is not around, feel free to call or email the other, and we would get right back to you.
So I know you specialize in reverse mortgages, but you handle other types of mortgages as well. Is that right?
Yes.
Okay.
We do refinances and purchases, and have a lot of experience doing that. Yes.
Okay. So we only have a couple minutes left, but maybe with those couple minutes, you guys can just give us an overview again of maybe some of the advantages and disadvantages of reverse mortgages, so people understand, and just any words of advice for those considering a reverse mortgage loan.
Well, I think it's a good idea that people think a little bit outside of the box. Everyone knows that it's good to do a reverse mortgage when that's mainly your only option and so forth to access funds that you need. But some people don't realize that you can actually use a reverse mortgage as a purchase loan. So if you're selling and you want to buy something smaller, you can take the equity you've taken from selling one home and use that for a down payment, and actually access a reverse mortgage as a purchase loan when you're buying the smaller home. And then also sometimes people can think ahead, and they might want to help their child or their grandchild with some maybe gift funds to help them buy a home, or even help them with college funds, or just access some of the inheritance and give it to their heirs a little earlier than expected. And that's we've been finding that some people are starting to think that it is advantageous to be able to do that in certain instances. But definitely the benefits are what we mentioned. It's easy access to equity that you need without having to qualify and without having to make any monthly payments. And it is a non-recourse loan, so you don't have to worry if your property goes down in value. And the only disadvantages that I really see are that the closing costs can be rather high, but there are some new programs out there where if you access a little less money in the first year, you can save a lot of closing costs that you normally would have had to pay and keep it much lower than it used to be. So both that's a new advantage for reverse mortgages that they just came up with in the past 6 months.
Great suggestion. That's a great suggestion. Yeah. So we got 15 seconds here. So just any words of advice for those considering reverse mortgage?
I would just say the most important thing is just to make sure that the senior understands the loan that they're considering and how it works, and that they know all the different options available. As Janice mentioned, talking to somebody who knows not just reverse mortgages but traditional mortgages as well will help them evaluate what's out there and what's hopefully the best fit for them.
Well, great. Well, thank you so much. We've had on The Aging Boomers, Janice Fincher and Andy Block from Opes Advisors. And again, that website is
www.opesadvisors.com.
Hey, that's easy enough. Well, thanks so much for being on the show, and we've got to have you back. Lots happening in your industry, and we want to keep in touch. So thank you for joining us, and thank you all for tuning in. And again, you could go to iTunes or our website at agingboomers.com, or you could download a free app on your iPhone or Android phone and listen to these podcasts and great interviews in their entirety. So thanks so much for joining us. Be safe out there, and we'll talk to you all soon.